This is BTV Business Television.
Hello, I'm Taylor Tone.
And I'm Jessica Katrachak. Welcome to BTV Business Television.
This week on BTV, we'll see how one gold developer is using a unique business model to fast-track production.
It's a fantastic time to be in the gold space. We have $2,500 gold, and I think we're in really good shape for our investors to continue to add value.
We'll get the latest on the approaching green steel revolution.
Very excited about what's happening in the market right now, and very happy that we have a unique product that can actually help that transition to decarbonize the steel industry.
We'll look at a game-changing technology proven to enhance the absorption and efficacy of medications.
The company is currently focused all of its research and development efforts at this point in time on the GLP-1 marketplace.
And we'll see how a gold developer is significantly shortening its timeline to production.
This was a past producer, and it produced over 2 million ounces of gold at an average grade of 9 grams. So it has a history of production.
All this and more ahead on BTV Business Television. Any company developing a gold project has two key goals: get the project into production and establish positive cash flow as quickly as possible. The same applies to Contango ore. Fortified by a joint venture with Kinross, Contango has developed a business model that has enabled it to reach production at its Manh Choh project in Alaska in a remarkably short time frame. This unique approach has enabled Contango to quickly get a foothold in a very demanding space.
Rather than develop our own mill and tailings facility and all that, we are simply using the one that Kinross has operated at the Fort Knox mine for 30 years. In today's world, if you were permitting a tailings facility with hundreds of acres of impacts to wetlands and waterways, that would take you at least 5 years, maybe longer. By not building a tailings facility in the mill, we minimized our environmental impacts, which allowed us to be able to permit the project start to finish in about a year and a half. So we saved in capital, we saved on time, and we don't have that typical brand new mill startup. Fort Knox mill has been operating for 30 years, so they understand and know the mill really well.
Another unique characteristic of what Contango calls its hybrid royalty model is the fact it only has 12 employees.
When you look at the amount of cash flow per individual employee, it's a very high ratio. We're cash flowing $6 per share per employee. The revenues we're generating is over $12,000 per employee. And that is identical to what the royalty companies do. That's why they have such good, strong valuations.
In addition to these impressive valuations, Contango recently reached an important milestone.
So at Manh Choh, we achieved our first gold production in Q3. We're going to generate about 67,500 ounces of gold for our credit. That's going to generate a lot of free cash flow. Our all-in sustaining costs are $1,116 an ounce. We have gold at $2,500, so you can do the math. We're going to generate a lot of cash flow. The mine itself will produce over 200,000 ounces of gold. It's not a small mine. It's 8 grams per ton. It's one of the highest grade open pit gold mines in the world. So it's a very robust project.
Given Contango's recent successes, gold analyst Richard Gray believes the company's direct shipping ore approach can continue to provide an important competitive advantage.
Contango's upside is extremely high because they can use this model multiple times over and add to their production profile very quickly without having to access capital markets or use a lot of debt, or really to dilute the share count much more than it already is.
Contango already has a pipeline of projects that they believe will be a good fit with their business model.
We have 2 other projects that are right behind Manh Choh, our Lucky Shot project and our Johnson Tract project. And our 5-year plan is to develop those using that direct shipping ore model, not building a tailings facility and a mill and a power plant. Because they're high grade, we can direct ship it to an existing facility.
With production of its first gold bars and the promise of its Lucky Shot and Johnson Tract projects, Contango is feeling a rush of momentum.
It's a fantastic time to be in the gold space. We have $2,500 gold, and we're generating cash flow, and we've got some exciting exploration projects that we know we can advance with our existing cash flow. I think we're in really good shape for our investors to continue to add value.
Contango's 5-year plan is to get the Lucky Shot and Johnson Tract projects online and increase gold production to about 200,000 ounces a year.
There's good news for First Nordic Metals. The gold exploration and development company recently announced a $10 million bought deal. The net proceeds from the financing will be used to advance their 2 district-scale projects in Sweden and Finland.
First Nordic Metals is an exploration and development company focused on Sweden and Finland. Our flagship asset is the Barsele Gold Project, which is located on the Gold Line belt, and that has a resource of 2.4 million ounces of gold in all categories. And around that, we have over 100 kilometers of strike. So the project itself is one of Europe's largest gold deposits, and our land package is the largest claim holding in Sweden. And then in Finland, we have the Oijärvi Greenstone Belt project. That has a maiden resource at over 300,000 ounces. It's a high-grade underground deposit. We have a very strong relationship with Agnico Eagle, who has been a joint venture partner on our flagship project, the Barsele project, since 2015. Agnico Eagle has now become a significant cornerstone shareholder of the company, coming in for 13.3% of the company. This area is very prolific for gold deposits. We think we have potentially one of the next major gold camps in the world.
Coming up on BTV, more companies to keep on your radar.
We've got a unique product that is necessary to decarbonize the steel industry. And we've got a proven team to be able to deliver not only our current operations, but also potential expansions.
We'll be right back. You're watching BTV.
The last time we spoke with David Cataford, CEO of Champion Iron, he focused on the potential of his company's high-grade iron ore product to help decarbonize the steel industry. Well, that potential is becoming a reality.
Just in the past year and a half, we've seen the world completely change. We've seen over 100 contracts be signed for greener steel products. So very excited about what's happening in the market right now, and very happy that we have a unique product that can actually help that transition to decarbonize the steel industry.
The steel industry, which represents nearly 10% of global emissions, is in transition. High-grade iron ore is enabling a move away from coal-powered furnaces to cleaner electric arc furnaces, making it an extremely valuable commodity in the green steelmaking process.
The time required to bring a new high-grade mine into operation is between 10 to 14 years. So we fully benefit from that because we produce exclusively high-grade iron ore, and we've accumulated over the past 10 years billions and billions of tons of this high-grade type material in other projects surrounding our Bloom Lake operations to eventually bring more production into the market. This is why we're currently investing just about $500 million so that we can upgrade half of our tons, or 7.5 million tons, to 69%. Which would be one of the highest grade materials in the world. When you're over 67.5%, you then qualify to be able to sell into these electric arc furnaces.
High-grade iron ore represents a niche market which commands premium pricing. This in turn helps to dampen the effects of a sometimes volatile industry. But that isn't the only benefit producing high-grade iron ore provides.
We had a clear disadvantage in the past of selling tons into the Chinese market. But as we get into this higher grade iron ore, we then start selling more into Europe, the Middle East, the US, and Canada. So these are all markets that are much closer to home. So you take one of our largest disadvantages from the past, and we're converting it to an advantage compared to the other iron ore suppliers in the world.
But the benefits don't stop there.
Canada has recently included high-grade iron ore on its list of critical minerals, which gives access to different funding, different potential government subsidies to be able to develop resources, access to infrastructure funds to be able to bring power to develop the ports. So it really positions us favorably to be able to access those types of funds.
In order to take advantage of the game-changing opportunity its high-grade resource provides, Champion recently completed a $700 million Phase 2 expansion at its Bloom Lake mine. Collectively, with expenditures by its prior owners, Bloom Lake now benefits from over $4.5 billion in investments, representing multiples of Champion's recent market valuation.
When you look at our ramp up and the expansion that we made at site, it brings us from roughly 7.5 million tons to 15 million tons. And we also have opportunities to debottleneck our own operations. So we should be able to run over 17 million tons per year.
Champion's Phase 2 expansion was funded entirely out of cash flow, and the company is in an excellent position to finance further growth as the opportunity generated by high-grade iron ore evolves.
We've got a unique product that is necessary to decarbonize the steel industry. We've got decades of resources that we've accumulated over the past years, and we've got a proven team to be able to deliver not only our current operations, but also potential expansions.
In addition to the momentum Champion Iron has created, it's completed the 2024 financial year with a robust balance sheet, enabling it to continue its capital return strategy with a 7th consecutive semi-annual dividend. Prime Mining is feeling the tailwinds at its flagship gold and silver property in Mexico. This underexplored high-grade resource, which has already more than doubled in size, continues to show excellent discovery potential.
Prime Mining has a high-quality gold-silver resource in the very prolific Sierra Madre Occidental Belt in Mexico. We're focused on adding value through continued exploration on our vastly underexplored property, while at the same time looking at technical de-risking for eventual PEA and project development.
In October of 2024, Prime announced a significant update for the gold-silver Los Rayos project, including the addition of a high-grade resource demonstrating underground and open pit optionality. The company is well-funded and has high confidence in further expansion of the resource.
At Los Rayos, we have approximately 70% of the in-situ value is gold and 30% is silver. Given the exceptionally high-grade core to this ore body, we're hoping that in the future we have a good choice between open pit or exclusively underground mining.
Stay tuned to BTV for some investment ideas you won't want to miss.
The company is currently focused all of its research and development efforts at this point in time on the GLP-1 marketplace.
We'll be right back. You're watching BTV.
Welcome back. Hitting it big with a new drug or technology in the pharmaceutical industry can mean big business. Lexeria Bioscience believes that it's making serious progress along that path. Here to talk about their breakthrough technology is CEO Richard Christopher. Thanks for joining us today, Richard. Perhaps you can start by telling us a little bit about your company and what your current focus is.
Lexeria simply is an oral-based drug delivery enabling technology company. Our company develops a technology which we call Dihydratech. The company's been developing this technology for approximately 10 years now, but it wasn't until within the last year that the company actually found the true applicability of the technology in the area of GLP-1. So the company is currently focused all of its research and development efforts at this point in time on the GLP-1 marketplace. These are either injectable drugs, most notably referred to as Ozempic, and there are oral tablets as well, most notably known as Rybelsus.
Okay, so then how does Dihydratech actually work?
Basically what we do is we take active pharmaceutical ingredients or drugs that are available on the marketplace today. We run them through our Dihydratech process, and when we do that, we're allowing the drug to enter the bloodstream at a much higher pace than without our technology.
What would you say are Dihydratech's key advantages?
So when the drug enters the stomach and the intestines, the Dihydratech process allows the drug to be absorbed into the bloodstream at a much higher rate.
Okay, so what's the proprietary factor here for Dihydratech?
Dihydratech is a well-patented technology. We have 46 patents worldwide. We hold both composition of matter as well as method of use patents with the technology, and we're seemingly publishing new patents each and every month.
What's the potential for a technology like Dihydratech?
And when we think about the two key players in the marketplace today, semaglutide and tirzepatide, those two drugs did about $30 billion in combination in 2023. That market is expected to double in 2024 and exceed $100 billion by the end of this decade.
Richard, you've had some other exciting developments. Could you update us on the results from Human Studies 1 and 2?
Human Studies 1 and 2 were concentrated on a head-to-head comparison between the existing oral tablet on the marketplace, Rybelsus, and we put that up against our own dihydrotech formulation of Rybelsus within the study. And what we found is that we can dramatically increase the amount of drug that's being absorbed into the blood. We can keep the drug within the blood system over a longer period of time. And not only that, we can significantly reduce the amount of AEs associated with taking the drug orally that exists today.
Richard, I understand you also had some big news with a major pharmaceutical company. Can you elaborate on that for us?
So right around Labor Day, the company announced that we had entered into a material transfer agreement with a global pharmaceutical company. That company has chosen to remain anonymous at this point in time. But nonetheless, the company has caught the attention of Big Pharma and entered into the first step of an agreement with them. We've issued them a limited license to use our dihydrotech technology with their existing drug that is currently marketed in the market today. It's for use with their drug and their drug only. So this agreement does not preclude us from entering into similar relationships with others, including competitors at this point in time. This is a huge game changer for the company. It validates our company, it validates our technology, as well as provides us for a potential means on how the company may move forward from a licensing perspective.
Great stuff. That was the new CEO of Lexaria Bioscience. We'll be keeping an eye on their developments with the major pharma company as they aim to prove up Lexaria's technology. Things are cooking at OTCQB Development. With several promising irons in the fire, the prospect of hitting it big grows by the day.
OTCQB Development, our brownfield specialists, our MO is that we built Canada's largest gold mine, Canadian Malartic. That mine is now the largest one in Canada and the 9th largest in the world. For our Caribou asset in central British Columbia, we're in the last leg of the journey to receive the final mine permit, which includes the construction permits. This deposit is unique in that it has a significant amount of ounces per vertical meter. It's a very ESG-friendly mine. We're on hydroelectric power, and this mine will be close to 70% electric, so it's quite an interesting mine from the ESG standpoint as well. This is a critical project, so this is a big regional job generator, so we think that there's a lot of motivation for this project to go forward. We certainly have a big copper target on the go in Utah. We've got a project there called Tintic. If we hit on that one, it'll be a very interesting outcome. Nobody's hit a big copper discovery in North America for a minute.
Don't go away. More intriguing investment opportunities are on the way.
It has everything you need to build a mine and move quickly into mining, plus it has permits in place. So it's really set up to go straight back into production again.
We'll be right back. You're watching BTV.
It's challenging times in the gold mining industry. On average, it can take 10 to 15 years to get a mine into production, unless your asset is the past-producing Madsen mine in Western Ontario. Then your timeline is substantially shorter.
Our plan at the moment is to get Madsen back into production in mid-2025. And we're working hard to get there. We have a number of studies to do, some more drilling to do, underground development, but our focus and plan is to get into production in 2025. It's high grade, it's in the Red Lake region of Canada, very, very prolific gold mining region in Canada. Over 40 million ounces have been pulled out of this region, all high grade. So that's the main thing, you gotta go where there's high grade resources. This was a past producer, and it produced over 2 million ounces at an average grade of 9 grams. So it has a history of production. And from an infrastructure perspective, it has a mill in place, it has tailings dam, it has everything you need to build a mine and move quickly into mining, plus it has permits in place. So it's really set up to go straight back into production again.
with an indicated resource of 1.7 million ounces of gold, plus 0.4 million ounces in the inferred category, all the pieces have fallen into place.
The difference between West Red Lake is that we purposely wanted to acquire an asset that could move quickly to production. We also wanted to buy something cheap, because when you have a combination of getting a good asset and undervalued, then you can move forward very quickly, and also you play two markets. You play a market who people are interested in a value play, which you're getting pennies on the dollar for your asset, and also people who play the gold play. We're actually looking at this as the base for a large gold mining company, and so we've assembled that technical team with lots of experience. We have great backers, as in Frank Giustra and his network. We have a fantastic board, as in guys who have really built mines and scaled companies, and then we've a young management team who've all worked and experienced the growth of gold mining companies. So as we build on that future, I think we have all the hallmarks of a company that's really going to move forward.
Gwen Preston, VP of Communications, left her successful career as a newsletter writer to join West Red Lake Gold at a pivotal moment.
Golden Runway describes the way that share prices quite reliably re-rate higher when a company goes from building a mine, which costs lots of money, to operating a mine and producing gold, which of course makes money, especially in this gold environment. So that Golden Runway applies to West Red Lake Gold because we are about to turn on our first gold mine. We're about to go from spending money to making money, and we should enjoy a share price re-rate on that. The mill at the Madsen Mine project is a beautiful piece of machinery. It was built only 5 years ago. It was built by the previous company, but they stumbled at the finish line. But they built a great mill, and that mill is an incredible asset. We are very confident that that mill is going to perform really well, and it's a huge capital investment that we don't have to make to turn this mine back on.
Drilling will continue this year, focusing on confirming and extending the known resource zones.
The plan is to do like 50,000 meters of drilling on the existing resource. We're doing a number of new technical studies, understanding the project and the resource, and we're actually buying capital equipment now and everything, getting ready for it to move into production. So that's what you're getting, the combination of West Red Lake. You're getting gold price moving, but also you're getting that move into production. And the combination of those gives you a lot of leverage to that gold price.
With a solid plan and the right asset, West Red Lake Gold Mines is ready to embark on a promising journey as they transition towards production. Surge Battery Metals is in the right place at the right time. The company's high-grade lithium discovery in Nevada is seen as a key find in the effort to secure America's lithium supply chain, and an important metal essential to the advancement of the green revolution.
Surge Battery Metals is the preeminent lithium exploration company in the United States of America. We're developing the lithium asset called Nevada North. It's in Northeast Nevada, and it contains the highest, best grade lithium clay in the United States of America. We have just announced our latest resource upgrade. That was in September, showing that it's 11.2 million tons, which makes it the largest lithium clay deposit in the US. And now we're on track to do what we call the next phase of development, which is the PEA. And that'll be scheduled for first quarter of 2025. It's really tied into domestic lithium supply, and that's the upside. America is seeking to secure domestic lithium production, and our upside is in being able to deliver that. The plan of operation will allow us to do more expansion in terms of drilling, and we'll also be working on the engineering towards the bankable feasibility.
We just heard from a compelling cross-section of resource companies and a bioscience innovator,
giving us lots of great investment possibilities to consider.
Thanks for joining us today for BTV. I'm Jessica Katrachak.
And I'm Taylor Tone. Hopefully today's show helped you discover some investments. And until next time, may your portfolio prosper.